Kudlow forecasts are better than others. Let's bring in our guest, ace financial journalist John Carney and the great Steve Forbes, Forbes media chairman and editor-in-chief. Gentlemen, welcome. Begin with you, Steve Forbes. 400 million of reserves put on the market. I don't know. This is a global. Is it going to mean anything? Prices actually went up a little bit today. Maybe to me, I'm more concerned about the Strait of Hormuz in the short run than I am about spending a lot of our reserves. But what do you think?
No, I think it just goes to show, one, the world is united that Iran is a bad actor. That's why they're all releasing those reserves. So politically, psychologically, it's very important. Strait of Hormuz, I think they will start to get ships through. They'll figure it out if they have problems. Wars always bring up unanticipated problems. You deal with them. But the key thing is the president not lose his nerve and see this thing through and make sure Iran's regime is changed. And that means destroying all the police apparatus, the military apparatus. That's what they have to see through. In a matter of weeks, it should be done. But if he falters, it's going to have repercussions everywhere. Ukraine, Taiwan, not good stuff. See the thing through. As you say, oil prices will come down when this is over. Any feed through on prices will be short-lived. The key thing is people have faith, must see that the president did something and saw it through. That's how you get authority, not by listening to daily cavils from people who say the world's coming to an end or there's great things ahead. Let events play out.
John Carney, inflation, deflation, stagflation, any other inflations that I haven't mentioned?
So it's definitely a deflationary event. When people have to spend more at the gas pump, they will not have enough money to spend on retail spending. So we're going to see the CPI rise for the March numbers when those come out a month from now. We're going to see bad retail sales because people will have less money to spend. But look, you pointed out, that won't have a giant macroeconomic effect as long as this gets resolved relatively quickly. The war doesn't even have to end relatively quickly. They do have to clear the Strait of Hormuz. We do have to see ships going through there. It's not reassuring that we have military officials telling Reuters that it's too dangerous for our Navy to escort ships through there. I'm sorry, Mr. President. The ships aren't going to go through without the Navy escort. That's just not going to happen. It's too dangerous. Those ships are not manned by people who are paid to risk their lives against Iran. The people who are paid to do that are us, the U.S. military.
Yes, but I mean, I don't want to criticize CENTCOM. I don't know enough about it. If they're clearing the way, but that may be, I mean, some people say the waterway is down in the valley. There are cliffs on the side. Maybe they have to clear those cliffs away. I don't know the answer to that. Or, as the president suggested, maybe they have to clear the way on land before they can clear the way on water. I'm sure one way or another, CENTCOM and the Navy will protect the Strait of Hormuz.
I think that's right. I think we will very soon. Look, one thing President Trump always does is doesn't tell you exactly what we're doing strategically. You should never do that. So I do think we'll probably get very good news about the Strait of Hormuz soon. That will actually have a violent reaction in markets. You will see stocks race up and you will see the price of oil crash. Remember when there was a tweet that they had to delete and then say we didn't do it?
Navy was.
That they got through one ship. That said, oil prices down 30%. We were back down near $80 a barrel. If ships start really coming through there, I think we're going to see, look, it'll take weeks to work out exactly, which ships go through. When you get a traffic jam, just like on a highway, you get a traffic jam, it takes a little while to clear, but the prices will almost instantly reflect the fact that it's reopened. So once they reopen that, I think you're absolutely right. People should stay long in this market because the risk is that you're going to get a violent upswing in stocks and a violent downswing in oil.
But and we shouldn't forget, in the 1980s, we had what was called the tanker war. We flagged foreign ships to get them through the Strait of Hormuz when we were having a showdown with Iran. So we've been here before. We know something about it. So again, few weeks, that's the key thing. Stick it through.
No, I agree. It's just interesting to me. Look, one thing that's very different between then and now, okay, is we're producing a lot more oil. I mean, I agree with you that there's probably more consumption than production. But the fact that you have this growing energy industry, okay, that creates, you know, like it or not, the higher prices lead to profits, lead to income, lead to wages, etc. In other words, all these effects are different because we're all producers today. We're all consumers, but we're all producers. We're also oil exporters today. That's completely different. I mean, think of it this way. Why haven't interest rates? I mean, interest rates haven't really budged, okay? I mean, maybe a couple of basis points one way or the other. A normal oil shock, you'd see rates just rising, you know, a couple hundred basis points. Not happening, Steve Forbes. What does that tell me? Tells me there's not much economic impact one way or the other.
Well, the key thing, again, is duration.
Yes.
If it lasts, it's going to hurt. If it's fairly quick, we'll get over quickly. It's like a cut. If it's a deep one, you got a problem. If it's a short one, we'll get through it. And that's the key.
Would you give the Fed advice on this?
I would give the Fed advice on, and I hope Kevin Warsh does it, drop this nonsense prosperity cause inflation. Say that short rates are too high compared to long rates, which haven't moved very much, and bring those short rates down, starting with the interest on bank reserves. And they should do it now. Not wait until June.
By the way, he met with, Kevin Warsh met with Senator Tillis, who praised him, but was still blocked the nomination because they haven't figured out the Federal Reserve cost overruns and But what's going to happen? You can't keep doing this. I mean,
John had the answer.
I know.
President Trump should pardon.
Should pardon? Yeah, exactly. If you pardon Powell, it ends the entire
You may
thing.
have to pardon Tillis.
Look,
may have to pardon a lot of them.
I don't know what Tillis thinks will happen, and somebody should ask him this. One of the reporters should say, what do you think happens when Jay Powell's term runs out? He is no longer the chairman in May. So either we have a situation where Trump will get to appoint somebody no matter what. Trump gets to choose the next chairman. He will the FOMC gets to choose gets to vote, but Trump will get the chairman of the board of the Federal Reserve will be Trump's choice.
By the way, sitting right where you're sitting, Mickey Bowman, the vice chair of the Fed, I think it was last week, she said she didn't say exactly, but she's leaning towards lowering interest rates.
Right.
And she thinks the whole conversation is toward lower interest rates, which I take it both of you prefer.
Yes, but also say we're going to defend the dollar.
Yes.
Great countries have great currencies.
King dollar.
I think we're going to.
But King dollar's done. Here's another difference. The dollar's done well during this war. In the 70s, the dollar collapsed. In fact, Nixon collapsed it. I mean, that was, this is the whole, and the end to the gold linkage was done. And so the dollar was deliberately weakened. So inflation went sky high. I mean, there's a lot of, I'm just saying, there's a lot of differences today than then. And so economists shouldn't be so fast to make these projections because it's a different game.
That's right. It's a different game. There is a little bit of a sequencing problem in that the consumer hit from higher gas prices will happen first. The income that goes to the oil companies won't leak back into the economy for a little while. So you have a downturn here, which is why if the Fed pays any attention to this, and I'm not sure they should probably just ignore it altogether. If they pay any attention, it should be to cut, because this is not an inflationary event. We are not monetarily stimulating the economy. We are not pouring deficit spending into the economy. It will not cause inflation. What it will cause is possibly consumers getting worried that gas prices are too high and they pull back on spending.
And I just wish the president would sit behind a desk instead of a podium and give a calm address to the nation, explaining, here's what might happen. We'll get over it. People may not believe it initially, but calmly lay it out. Then you dominate the narrative instead of hits when he gets off a plane or a helicopter or something like that.
I kind of like these real-time updates by the president. I don't know.
That's all right, but you should have a context for it so people say, aha.
Well, when it's all over, perhaps when it's all over. I'm going to leave it there. We're all over. Producers are yelling and screaming. So the moral of the story is not going to affect the economy.
No, there's no big impact on the economy.
Yeah. If you want to see economic impacts,
just buy.
See what's going to happen with China next month. That's going to be critical.
That'll be an interesting meeting. All right. John Carney, Steve Forbes, thank you very much.